Today we are going to see dissolution of a partnership business. This topic, partnership, is very important for students of grade 12 and grade 13. For partnership at HSC level, we have to know dissolution of a partnership business, admission of a partner, retirement of a partner. Today we are going to focus on dissolution of a partnership business. What is meant by dissolution? Dissolution means the closing down of a partnership business. A partnership business is going to close down. So when a partnership business is going to close down, all the assets will have to be sold and all the liabilities will have to be paid off. So let us see first the reason for dissolution. Insolvency of a partner, death of a partner can lead to dissolution, resignation of a partner, expiry of contract, or high level of liabilities. So there are many reasons for a partnership business to dissolve. So what are the accounts that we have to open in case of dissolution? First one, realization account, bank account, and capital account. So all these three accounts we have to maintain in case of dissolution. Realization account. A realization account is similar to an income statement. That is, expenses are debited and income are credited. It is similar to, not the same, but it is similar to an income statement. So, assets can be sold to partners or assets can be sold to outsiders. Whenever we are selling assets, either to partners or to outsiders, we have to credit the realization account. Now let us see the double entry concerning assets sold to partners. When we are selling assets to partners, we will not obtain money from the partners. We will have to deduct from the partners' capital account. So in this case, assets sold to partners, we have to credit realization account and debit partners' capital account. Assets sold to outsiders. From outsiders, we will obtain money because we are not going to sell assets on credit. The business is going to close down. So assets sold to outsiders, credit realization account, debit bank account. So what you have to remember, dear students, you have to remember the double entry. When we are selling assets to partners, credit realization account, debit partners capital account. When we are selling assets to outsiders, credit realization account, debit partners, debit bank account. Irrespective with whom we are selling the assets, we have to credit realization account. Either with debit partners capital account or with debit bank account. It depends if we are selling to partners, debit partners capital account. If we are selling to outsiders, debit bank account. The difference in the realization account will represent profit on realization. The profit on realization will have to be distributed among the partners. So in this case, we will have to transfer the profit on realization account to the partners' capital account, that is on the credit side of the partners' capital account. In case it is loss on realization, we have to debit the partner's capital account. So the difference in the realization account will represent profit on realization or loss on realization. Then we are going to prepare the bank account. So for concerning dissolution, the bank account should be closed, should be cancelled. Why? Because no money should be left in case of dissolution. The business will no longer exist, so there is no logic that we have balance CD and balance BD in the bank account. The bank account should be closed. This is an indication that you have done your work properly. In case of dissolution, the bank account should be closed. And then we have to prepare the capital account. The capital account, there will be no balance CD or balance BD. The difference will represent bank. So the difference in the capital account will be transferred to the bank account. If the difference is on the debit side of the capital account, it will be credited in the bank account. If the difference is on the credit side of the capital account, it will be debited in the bank account. And your bank account should be closed. This is an indication that your work is good. So these three accounts you have to open: realization account, bank account, and capital account. So let us see an example of dissolution. So you will be given a statement of financial position, and from the statement of financial position you will have the adjustment for dissolution, and from this information you will have to prepare your realization account, bank account, and capital account. So we assume that in the statement of financial position we have motor van $150,000 in the statement of financial position, and in the adjustment motor van sold to X, one of the partners X. Motor van sold to X $250,000. So the balance of motor van in the statement of financial position 150,000, and this motor van has been sold to X for 250,000. So how do we record this in the account? So first of all, we have to copy what we have in the statement of financial position on the debit side of the realization account. So on the debit side of the realization account, we will record motor van 150,000 and sold motor van to X 250,000. This we will have to record on the credit side of the realization account. We'll write down motor van 250,000, and since X has taken the motor van, we will have to debit in the capital account of X motor van on the debit side 250,000. Equipment in the statement of financial position 90,000, and in the adjustment equipment sold to Y 125,000. How do we record it in the accounts? In the realization account on the debit side we will write down equipment 90,000, and on the credit side of the realization account we will write down equipment 125,000, and then we'll have to debit the capital account of the partners of Y. We write down equipment on the debit side of the capital account, and in the column of Y we will write down $125,000. A third example, building in the statement of financial position $160,000. In the adjustment, building sold to Z $175,000, So in the realization account on the debit side, we'll write down building 160, and on the credit side, building 175,000, and then we have to debit the partner's capital account Z. In column Z, we write down the debit side building 175,000. The remaining assets were sold and realized. Remaining assets, that is, some of the assets have been sold to outsiders. So in the statement of financial position, we have fixtures and fittings, $120,000, and in the adjustment, the remaining assets were sold. Fixtures and fittings, 220,000. So in the realization account on the debit side, we'll write down fixtures and fittings 120,000, and then since it has been sold to outsiders, we debit the bank account of the on the debit side of the bank account. We write down fixtures and fittings 220,000. Inventory in the statement of financial position, $50,000. In the adjustment, remaining assets sold, inventory $65,000. So how do we record it? On the debit side of the realization account, we write down inventory 50,000, and on the credit side of the realization account, we write down inventory 65,000, and then we debit the bank account. We write down inventory 65,000 rupees, dollar. Trade receivable in the statement of financial position, $25,000. In the adjustment, remaining assets sold, we have trade receivable, money collected from customers, $40,000. $15,000. So in the statement of financial position, we have trade receivable. We have to record it on the debit side of the realization account, 25,000, and then on the credit side of the realization account, we write down trade receivable 15,000, and then we debit bank account trade receivable 15,000. And we have trade payable in the statement of financial position, 40,000, and in the adjustment we have trade payable paid in full, 35,000. So in this case, we have to pay trade payable 35,000. So we credit the bank account. We write down trade payable 35,000. The difference, the trade payable in the statement of financial position was 40,000, but full payment made 35,000. So the difference will represent discount received. Discount received is a gain, so it will be recorded on the credit side of the realization account. So on the credit side of the realization account, we will have discount received $5,000. In some cases, we see in the Cambridge worksheet, on the debit side of the realization account, trade payable, and the one which is in the statement of financial position, and the one in the adjustment, we put it on the credit side of the realization, so the difference will be cancelled. So at times we see this in the mark sheet, but I would like you to do it in this way. The difference will represent discount received, so you put the different discount received on the credit side of the realization account, because we do not record any liabilities normally in the realization account. If we have liabilities, we have to pay, we record it in the bank account. So here we are so far concerning dissolution of a partnership business, how to record transaction relating to dissolution in the realization account, bank account, and capital account. So in this case, we have to close the realization account. The difference will represent profit or losses, then we transfer it to the capital account, and the difference in the capital account will represent bank. Then we transfer it to the bank account, and the bank account should be closed. So here we are concerning dissolution. We will come back to you with a work example on dissolution in the next video. Thank you very much. So this is a statement of financial position of the business. We have moto van 140 000, provision for depreciation 8 000, ça nous donne 132 000, équipement 160 000, provision for depreciation 5 000, donc ça nous donne 155 000, building 175 000, total non-current assets, ça nous donne 462 000, current assets, we have closing inventory 20 000, trade receivable 65 000, cash at bank 70 000, donc total ça nous donne 155 000, and we have total assets 617 000. And then financed by, we have capital account, Kavin 150 000, Navin 100 000, Ravin 200 000. Donc, we have a total of 450 000. Current account, Kavin 10 000, Navin 6 000, Ravin 25 000, total 41 000. And then we have current liabilities, trade payable 126 000, donc ça nous donne 617 000. Et 617 000, ça, le compte est bon. Maintenant, we are going to see the additional information. This is additional information. On 1st January 2020, the partnership business was dissolved. Kavin took over motor van 162 000. Navin took over inventory 26 000. The remaining assets were sold and realized. Equipment 250 000, building 240 000, trade receivable 75 000, dissolution costs 4 000, profit and losses 2:3:5, trade payable were paid in full 120 000, required dissolution or realization account, bank account, and capital account. So this is the additional information of the business. So we have the statement of financial position and the additional information. Now we are going to prepare the realization account. So first of all, what we have to do, we have to copy from the statement of financial position. What we have in the statement of financial position, we have motor van net 132 000. Then we have to copy it in the realization account. So here is a realization account, 132 000. And then we have in the statement of financial position, we have equipment 155 000. We have to copy it here, 155 000 in this realization account. We have building 175 000 building. So we have to copy it here, building in the realization account, 175 000. And then we have trade receivable, closing inventory, cash at bank. We have to copy closing inventory 20 000. We have to copy it here. We have closing inventory 20 000. Trade receivable, we have in the statement of financial position 65 000. We copy it here, 65 000. Okay. And then we have the cash at bank. We have to copy it in the cash at bank. Cash at bank nous donne combien? 70 000. Donc 70 000. Then we copy it here in the bank account, 70 000 balance BD. And then the capital account balance, we have 150 000 and 100 000 and 200 000. We have to copy it in the capital account. On the credit side, we have balance BD 150 000, 100 000 and 200 000. And then we have to copy the current account as well. We have in the current account for Kavin, we have 10 000, Navin 6 000, and Ravin 25 000. So we have to copy it on the credit side. Current account on the credit side of the capital account, 10 000, 6 000, 25 000. And now we are going to see how to deal with the adjustment in the. So the first adjustment, which is adjustment. On 1st January 2020, the partnership business was dissolved. Kavin took over Motovan 170 000. Kavin took over Motovan 170 000. So whenever assets is sold to partners or to outsiders, we have to credit the realization account. So in this case, we credit realization with Motovan, credit realization 170 000. Kavin has taken it, therefore we debit in the capital account of Kavin 170 000. Okay. Now we have Navin took over inventory. Navin took over inventory 26 000. Took over inventory 26 000. So again we have to credit in the realization account. Here we are 26 000, and then we have to debit in the capital account of the partners in Navin inventory 26 000 Navin. There we are. And then the remaining assets, the remaining assets were sold and realized. These assets have been sold to outsiders. Equipment, we credit in the realization account. Equipment 250 000. Then we have to debit in the bank account. So we debit in the bank account 250 000. Okay. And then we have building 240 000. Remaining asset 240 000. Then we credit in the realization account 240 000. And then we have to debit in the bank account 240 000. And then we have trade receivable 75 000. Credit in the realization account 75 000 in the realization trade receivable. Then we debit in the bank account 75 000. And then we have dissolution cost is an expense. We debit in the realization account dissolution cost 4 000. Then we credit in the bank account dissolution cost 4 000 we have to pay. And then we have the trade payable were paid in full 120 000. So we credit in the bank account 120 000 trade payable. The amount in the statement of financial position for trade payable is how much? Is trade payable how much? 76 000. Therefore the difference will represent discount received. We credit in the realization account discount received 6 000. Okay. So all the entries have been made. Now we have to balance. We balance the realization account. On the credit side, the credit side exceeds the debit. Therefore, we have 759 000. 759 000. Then we have to deduct on the debit side. We will get sur profit Kavin 41 600, Navin 70 400, et Gravin 104 000. Then we have to transfer the profit to the capital account. We transfer the profit to the capital account 41 600, 70 400, 104 000. Then we have to close the capital account. We have the total, and then we have the total in the capital account. Ça nous donne, just 1 minute. This will give us 329 000. 329 000. So in the capital account, the total on the credit side, we have 206 600, 168 400, 329 000. And then we have to deduct on the debit side of the capital account. We get the difference in bank, 39 600, 142 400, 329 000. This one we have to transfer to bank account. So there in the capital account it is on the debit side. We have to transfer it on the credit side of the bank account. So in the bank account on the credit side we have Kavin 39 600, Navin 142 400 et 329 000. Donc the bank account will balance by 635 000. So this is a way to do dissolution.